I'm afraid the experiment we had with democracy, which was based on the capitalistic system we had in the Western world, was incredible in terms of creating prosperity in the world. Never before have people been able to eat as well and drink as well and live as well as now. And this is a system that will destruct itself. There's no question about this. Democracy is a system that will not last for very long.
Hi folks, Wealthion founder Adam Taggart here. Thanks for joining us for part 2 of our interview with macro trend forecaster Marc Faber, the original Dr. Doom. If you haven't yet watched part 1 of our discussion with Marc, in which he details out the rising threats to our general prosperity, head over to our channel at youtube.com/Wealthion and watch it there first. It sets the context for the investment perspective that Marc and I, as well as our partners at New Harbor Financial, share in this video. And please, take just a moment to support this channel by first liking this video and then clicking on the red subscribe button below. Doing so will help this video reach a lot more viewers. Okay, let's get started watching part 2 of our interview with Dr. Marc Faber. And I've recently seen you say that you expect that we may be entering a new commodity super cycle. Is that still the case?
I'd say we probably kind of bottomed out in commodities in between 1998 and 2001. And we were in an upcycle, but then came the great financial crisis, so commodity prices dropped and so forth. And I think we're still in an upcycle. And what I said is that in real terms, inflation adjusted, in other words, if you measure the consumer price index and so forth, say agricultural commodities are still very cheap. Wheat, corn, extremely cheap. Also, I hold significant position in gold, but I don't think that gold is that cheap. It's much more expensive than, say, corn and wheat. But you and I, for us, it is difficult to buy wheat and corn, and it's easy to buy gold. But just today I was watching, it's so funny, this show. They offered in California, you can have on the street, they offered it, $10 a bank bill, banknote, or 1 ounce of gold. Not one of the person chose the ounce of gold, which is worth $1,800. They all chose the $10, all of them.
Isn't that crazy? I think that's a video put out by Mark Dice, who does this from time to time, and it shows you how ignorant.
I think it's very funny, but it tells me the potential for these kind of investments like gold and silver and platinum is still huge, because the population, 90% don't know about it. But it also shows how many people value $10 so highly. It shows a lot of people have no money at all. So it's Marc, actually, for me, it's kind of a sad story.
Oh, it's a very sad story. Do you see a time where inflation gets so bad that the populace finally wakes up to the fact that gold is a much better safe haven of storing wealth, and there is a shift in preference?
Yes, but the problem is that by the time they wake up, maybe they have no money to buy it.
Right, it may be too late.
This is something to consider. So, I mean, I just looked at the charts. When 9/11 happened in 2001, gold shot up, from where to where? From $250 to $280. And after 9/11, it came straight down again to 260. So we have today gold price 1,800. Is it cheap or is it where it should be? Well, I have my gold and I accumulated gold since the 1980s. So for me, 1800 is actually not such a cheap price. But then I look at the price of properties. And I like to watch old movies. One of the reasons is that in old movies, they talk about prices and about wages. So in old movies, if you got a wage of $100 a month in the Western states, it was quite high, quite good. A sheriff, he earned like $100, $200 a month. And you could get, in old movies, I sometimes watch, like the price of a hotel. You could get not a 5-star hotel in New York, not the Waldorf Astoria, but an ordinary hotel for $1.50 a night.
Those must be pretty old movies.
To watch these prices. And I see the old Western movies. They go and pay at the bar 20 cents for whiskey. And then I watch, say, when I grew up in the 70s and so forth, Clark Gable was a rich person. He had luxury cars and so forth. But by today's standards, these actors, someone who earned really a lot of money, he had maybe a contract a year, at the time, the studios, they had a yearly contract of 3 years or 5 years on a star, like Maureen O'Hare or somebody like that. And maybe they earned $50,000 a year. But these were superstars.
Right. And nowadays it's 20 million a movie or whatnot. I mean, it really shows what you're saying here is it reflects how hugely devalued our currency has become.
When I started to work at White Wealth in 1970, is an American investment bank that then merged with Credit Suisse, first Boston and so forth, and then later Credit Suisse. Anyway, the average account at Merrill Lynch across the whole country in the US was like $3,000 US.
Wow.
If you opened an account as an executive and the client would transfer 100,000 to you as an account, it was considered a good account. 200,000 was a big account. I had clients 10 million. White Wealth and later Drexel Burnham, they couldn't believe that an individual had $10 million and would trade it like a gambler, buy and sell. And this is totally different dimensions. Today, you go somewhere and you say, oh, I have $1 million. People laugh at you. Even if you come with $1 billion, you're not a rich guy, you need 10 billion. Now the ones from Russia, they don't have, a lot of them don't have 10 billion anymore.
No, and the ruble, not only do they have a fraction of the money they had before, but the money they have left over valued in ruble is worth an awful lot less, right? So,
yeah, sure.
All right, well, Mark, as we wrap up here, and look, I could go talking for another 2 hours, and I know the audience would love for me to do so if it were possible. A couple last quick questions for you. Just one at a very high level. I'll sort of re-ask a question I asked at the beginning here, which is sort of where does all this end in your mind? We're going down this slippery slope of declining, diminishing prospects for the vast majority of people in society. Where does this end?
Well, I tell you, in my life, there were many surprises. Some were good and some not so favorable. I never thought when I studied, and as I started to work in the 70s, and as interest rates went on the 10 years Treasury to over 15% in 1981, I never thought in my life that it would be possible to have interest rates below 0%. That I never predicted. I never expected that this has happened. Number two, when I grew up, my grandparents, because I went frequently to the houses of my grandparents and my parents as well, the religion was basically Christian, but it was also, the government is good and we are free. We are the free world. And over there, the communists in China, and over there, the communists in Russia, the Soviet Union, and so forth, they're all evil. But we are good. Because we have democracies, we are free. And what I never, ever expected in life is that democratically elected officials could tell the population, you all have to stay at home. And if a guy in the UK, he went out to have a smoke, which I will do in a second, he went outside in his own house, in his own garden, they would come and arrest him. That is something I never envisioned, but now I understand. We have, through democracies, people were told they're free, but actually the government is not identical with the interest of the people. Say you look at people like Biden, what does he have in common with an ordinary guy? Nothing. You look at Kamala Harris or Pelosi, what does Macron and all these European leaders, Trudeau, what does he care about the ordinary trucker, about the ordinary person? Couldn't care less. The only thing he cares is to get the votes, nothing else. And they will do whatever it is, whatever is at that particular moment favorable to get votes. And this is a system that will destruct itself. There's no question about this. Democracy is a system that will not last for very long. It's an experiment, like Social Security. We will go back to other times, and I'm afraid the experiment we had with democracy, which was based on the capitalistic system we had in the Western world, was incredible in terms of creating prosperity in the world. Never before have people been able to eat as well and drink as well and live as well as now. You look at China, they were always poor. You look at Russia, most people were always poor. But now they all prospered because of the capitalistic system. People were lifted out of poverty. The poverty rate is very low at the present time, historically seen, from a historical percentage. But because some people want to improve the world, so they say, oh, we have climate problems and so forth. They don't do anything about it. They fly around in the private planes and so forth. And others say, well, you know, the capitalistic system has faults, we have to correct it and intervene. The central banks and the government officials. These interventions, they undermine the long-term growth prospect of an economy. And I live in Thailand. You know, I always said the Thai government is so bad, and so forth. I can't really talk about this because in Thailand you're not really allowed to criticize the government. But I have to say, looking at the last 2 years, we have no democracy. We don't have a good, I mean, we have on paper a democracy, but we don't have really a good government. But it's much better than in the Western world. We were relatively free here in Chiang for the last 2 years, no controls, easygoing, and so forth.
Wow.
So this,
All right.
I mean, as someone who's educated that democracy is the very best in the world. And because we have democracy, we are free and the others are not free. You start to question these assumptions. And one thing, I mean, that is depressing for me, all the government intervention is always, oh, this is for your security. It's for your good. It's like, I'm from the government. I'm here to help. Reagan said that very clearly. This is the most dangerous sentences. And I have to say, the standards of living in the Western world, certainly relative to the standards of living anywhere else in the world, relatively speaking, have gone down.
Yeah. Well, I hate to end on a depressing note, as depressing as sort of the end of the democratic and capitalist experiment here. And Marc, I'd love to get into this much more detail with you. We're going to have you back on again and start with that question. But as we wrap up here, for folks that have really enjoyed this conversation but want to continue following you and your worldviews, where should they go?
Well, I have a website where they can subscribe to my newsletter. But of course, the best is to wait every half a year when we have a discussion together. Or they can come and see me in Chiang Mai in the north of Thailand.
Oh, be careful. You might get a lot of people taking you up on that offer. All right, Marc. Well, look, when you mention your website, it's gloomboomdoomreport.com, correct?
No, gloomboomdoom.com.
gloomboomdoom.com, and I will put up the URL for that so that folks
very kind of you.
There.
Very kind of you.
Marc, as always,
well, thank you very much. And thank you for the patience of your viewers. And I'd just like to finish this conversation, which you may resent as not being very optimistic. But we have to understand there are lots of societies that have a different value system than we have. And I think that if you go through life, money is not the most important. There are many other aspects in life that are equally important or more important. The most important that you have a roof over your head and enough to eat and so forth. But the rest, I mean, I've looked at an interview not long ago of Stanisław Richter. He is considered among the 3, 4, 5 best pianists ever. And they showed movies about how he performed in Moscow during the time of Stalin and so forth. And they also showed in what kind of condition he lived. That's horrible. There was on one floor of these buildings, government buildings, one toilet, and there was a long line of people going in and out of the toilet. And he had his piano, he slept under the piano. And then they asked him, do you resent all this? He said, I'm a pianist, and I think most of the things in life are superfluous. In other words, you don't need them. You can live without them. And
right.
The important is what you do and how you live. And the rest is not necessary. It's completely unnecessary. He also lived in a simple house. And he was, at the time in Russia, for sure, the most famous pianist by far. And even today in the world, you ask, who are your favorite pianists? They will say Gould. He was a Canadian. I mean, he became a Canadian. And then Horowitz. He became, a superstar. But Richter was very simple, lived simply, played with the big stars, violinists, and so forth. And so I think the life of someone who is modest is also admirable.
Well, Mark, I really appreciate that context, particularly coming from you and our earlier conversation about the fact that it may be quite hard for a lot of people, in many different parts of the world, including the U.S., to make a lot of money given the financial conditions that we're heading into, the macro conditions that we're heading into. And rather than being overly focused on that and looking at it as a zero-sum game of, oh, I don't have as many dollars as I want, people should be really focusing more on the things that really matter in life. And financial wealth's a part of it, but it's just a component.
Part of it, a small part of it.
All right. Well, let's end
your
on
health
that healthy
and your health and my health is the most important. So
exactly.
We better have another drink.
Cheers. This is why I feel bad you're heading out to have a cigarette after this. Yes. But Mark, it has been, as always, just a fascinating joy to get to talk to you and get so much of your time. I look forward to having you back on here again 6 months from now. I know the audience does as well. But thank you so much, my friend.
Well, thank you very much. All the best.
All right. And now is the time on the program where we bring in our endorsed financial advisors to get their perspective on what Mark just said, but also to talk about what the market's been doing over the past week. And oh my God, the market has been doing an awful lot. I'm joined today by Mike Preston, one of the principals at New Harbor Financial. Hey, Mike, how you doing?
Good, Adam. How are you? Nice to see you.
Thanks. Well, look, a marathon discussion there with Marc Faber. What a treat. I want to get to the market action in just a second, but any general reaction you have to the voluminous perspective that Mark just shared with us there?
Well, Adam, that was a marathon session. I love listening to Mark. I'm trying to absorb all of my notes here that are spread out over the 2 pages. I could go on for quite a long time. I mean, Mark is a legend, an economist. Got a lot of respect for him and know of his newsletter, Gloom, Boom, Doom report that he's had for, I think, close to 3 decades. Mark says it like he sees it. He doesn't hold a lot back. I respect that about him. And, he's got a lot of criticism for central bankers and politicians in his talk. I'm just taking a look at some of my notes. He says zero social good comes from money printing. It's creating class disparity. He's saying that class warfare should be avoided at all costs. I think he mentioned the French Revolution and the end of that and how it ended for people. There was a lot of money printing during that time too.
Right. And he said no winners in that one.
No winners. I mean, they literally lost their heads at the end of that revolution, the leaders. So, it doesn't feel right. We could go on and on about, what the Fed and other central bankers are doing, but I truly believe it doesn't feel right. I believe that the financial system has been corrupted. I believe that freedom has in a big way been taken out of these markets. And that's not just sour grapes, and that's not doomer speak. Valuations are such that they've never been here. We're far beyond anywhere we've ever seen. And so if these metrics mean anything anymore, then you'd be lucky to break even after 10 years, as you said earlier. I don't think if you're talking about the S&P 500, the math says you probably won't break even. The return figures are strongly negative if you take a look at models that make sense, that people like John Hussman and others, and Jeremy Grantham, who was also mentioned in this video, put forward. And I think that the models aren't broken just because it hasn't happened yet. I think the rules have been broken. And the only question is whether that is going to stick or whether there's a moment of justice and or equilibrium coming. We're strongly in the camp of warning people that a moment of equilibrium is coming. We're not completely out of the market, but we're close. Our net equity is just over 10% for our managed accounts, and we're focused in things that would agree very much with what Mark was talking about. Real assets, things that are real, that come out of the ground and grow on the ground, things that really can't be reproduced with the flick of a pen or the push of a keyboard button. So things like gold and silver make sense, real estate makes sense, certain players or stocks of companies that make commodities like oil service companies, we recently added. But boy, there's just so much there to go over. Maybe, he mentioned, you guys were talking about Russia and the ETF RSX, something we're also looking at. breathtakingly can't believe how it's being cut in half every day. Not touching it here, probably because the biggest reason is we're very early days in this conflict, and nobody knows how it's going to end or progress. And there's a lot of risk there, including nationalization, probably the largest risk. So, in the end, Mark says, you know what? I think they're going to print money. He's right. They're going to print money. They've shown absolutely no restraint. Central banks are going to keep printing money. I'm asked every day, what do you do about that? Do you just buy stocks? No, I don't think so. I don't think that there's any way to get in it, to time the turn and get out to make it worthwhile. We are, again, about net 10% in stocks, and it's really concentrated in resource and commodity plays. But if this market does melt up, like some other people have said, including guests on your show, well, I think we're going to happily, for the most part, we might participate a little bit, but we're going to, happily step aside and let that happen. There's no telling what's going to happen. This market has been whipping at 100 S&P points each day in opposite directions. And as we speak, it's up close to 100 S&P points right now. So we'll see.
Yeah, we'll see. Well, as Mark was going through the asset classes he favored, I obviously was thinking of you, knowing that you were going to come on afterwards, because I know you guys are very much in lockstep of his, preference for, hard assets there. I was trying to sort of press Mark to say, okay, well, you saying there's going to be a lot of inflation. Is it from here and we're off to the races, or is there going to be some sort of correction in the markets? And what I got from him was he feels there is going to be a correction in the markets. I know that's the big risk that you guys are preparing against right now. He does think that once it happens, the authorities, the Fed, et cetera, are going to prioritize kind of rescuing the markets versus fighting inflation. They'll abandon the inflation hawkishness and they'll start easing again. I don't want to put words in your mouth, but I think you guys sort of think somewhat similarly as well. But you'll position for that, after the clearing event happens. Am I being correct here?
We will position long or longer the stock market as the market falls. There's certain levels, the technical support levels that we'll be looking for. I'd say the first one looks to be, from a chart perspective, around 3,800 on the S&P. I mean, we're down about 9% at the moment from the all-time high. The market actually topped late last year. If you're looking at the S&P, we went down as much as 14%, and we've snapped back about 5%, presently down about 9%. So not even in correction territory. So okay. There's
Mike, sorry to interrupt there, but I just wanted to note, you mentioned that market right now is down about 9% from the beginning of the year. Yeah. We were just talking the other day. Your portfolio has actually done quite well so far. So relative to the S&P down 9%, where are you guys right now?
Yeah, we're up a little bit. We're up a low single-digit number. Just north of. We're in positive territory. Let's put it that way. Bearing in mind that, we've got some dispersion amongst our accounts. Most of our clients are in roughly the same model, but we're just, we're in the positive territory. The market's down almost 10%, and we do continue to hold a good piece of cash. And what we do have in the market, thankfully, has started to perform pretty well. Mining shares, metals and mining, ETF, and oil service stocks all have started to do well. And even we have a position in emerging markets that's offset by an equal short in the S&P, and even that spread has contributed a little bit to the positive performance. So we're pretty happy so far. We never get too overconfident, that's for sure. But so far, so good.
Good. Well, and your model is, you're taking precautions against some of the risks you see in the markets, and those risks have started to manifest this year, right? We've had the markets cool off. We've had weakening economic data. We've now had the crisis in Ukraine. It's just nice to see that the model seems to be performing the way in which you would hope it would, given those developments. So let's actually talk about some of the market action here, because you talked about your portfolio's exposure to gold and oil and the companies that produce and service them. Those two commodities have just gone bananas, over the past week or so. They've been kind of rising for much of the beginning of this year, but obviously with a lot of potential, well, the crisis of military conflict in Europe, gold is spiking on that. And then, the prospects of a lot less oil coming out of Russia, that's going to tighten the world oil market. So no surprise that oil is shooting the moon. So comment for a moment on how those commodities are doing.
Yeah, I mean, crude oil at one time yesterday was up $10, and I'm looking at it right now. It's up another 7. Crude oil's at 111 right now. It's, I don't know if, I'm sure that most people are noticing it at the pumps. I just got a heating oil bill. I mean, I get it delivered to my house. I live in the Northeast in New England, and it was the highest I've ever seen by far. It was like $1,200 for delivery when it's normally like 700. So yeah, all of the cost of fuel is absolutely going to start to pinch people, and it's absolutely showing up in inflation. So I can't really say with any certainty that the run in crude is done. I mean, honestly, the charts look very constructive, and they do look like they could go higher and probably should go higher. Mark said in his talk there a little while ago that commodity prices have done very well in 2021, and they continue in 22. And yet, inflation adjusted, the prices of these commodities are relatively low. He does state that he doesn't think gold is cheap anymore, but maybe that's because he started buying it in the 1980s. But yeah, commodities are still historically undervalued relative to the S&P and should continue to do well.
Yeah, and it's crazy talking about oil, just reflecting back less than 2 years ago. I can't remember if it was March or April of 2020, but oil traded negative for a brief moment, right? I mean, we've gone from $0 oil to $110 oil in less than 2 years. It's just it's just volatile, strange times that we're living in. And I suspect that they're going to get even more volatile and more strange. And Mark himself even underscored that term volatile to describe the future that we're heading into. All right, well, we're going to keep this one relatively short, Mike, just because we took up so much time there with Mark.
That's okay.
But kind of as we wrap up, are there, you guys talk to a number of people every single day there at New Harbor. Any specific advice right now for the viewing investor here based upon the conversations that you guys are having right now with clients?
Yeah, I know it's not that exciting, Adam, but it's more of the same type of thing. Encouraging people to reduce risk in the stock market. The target that we often say is to get below 30%. Traditional stocks, raise some dry powder, have precious metals of maybe 10% of investable assets. Again, I think the commodities cycle is early. I think there's more and more opportunity there, and that's where you should be focused. I do believe in some of the charts and work we do with technical analysis following relative strength. We're starting to see some emerging markets countries tick up the charts in terms of relative strength. Specifically, Latin America is starting to show up on our screens. So emerging markets in general include Latin America and South America and that type of thing. And they've been a laggard for a long time. They look cheap here as a group. And, we'll be looking at other specifics, like I just mentioned, Latin America and so forth. So by and large, though, we're looking for a bigger drop in the S&P to start doing much of anything. 3,900 looks to be like a key level. And that would only be the first step.
Very well said, Mike. All right, we're going to have to leave it there for the week. Folks, in wrapping up, I'm going to tell you in just a second how to get access to some special content that we recorded with Mark that we didn't have a chance to fit into this video. Before I do, though, folks, I just want to underscore that this is an incredibly treacherous time for investing, and we highly, highly recommend that folks work under the guidance of a professional financial advisor who takes into account the trends and the big risks that Mark and I talked about in this interview. If you've already got a good advisor, great, stick with them. In fact, send them this video and ask them to sit down with you soon and just explain how they are positioning you for a lot of the risks that Mark mentioned here. If you don't have a good advisor, or if you'd like to seek the second opinion of one that is well steeped in all these issues, Just go to Wealthion.com and we'll connect you with one of our endorsed financial advisors for a completely free consultation. No commitment, no strings attached. We just want to make sure that people are getting good direction on how to be good stewards of their wealth given what's going on. If you're interested in doing that, just stick around at the end of the video. We tell you how to set up one of those free consultations. All right, so let's get to that free content from Marc. So when we interviewed Marc about 6 months ago, I got a ton of comments asking me, what's the deal with the Chairman Mao bust behind Marc? And I don't know if you noticed that in this interview, but he does have a Chairman Mao bust in the background behind him. Well, I asked him that question, and his answer was pretty surprising. So if you're interested in hearing his answer to that question, as few additional opinings of Marc, go to Wealthion.com/Mao, and you can watch it there right now for free. But before you do, please just help out supporting this channel and helping us get future great guests like Marc by first liking this video and then clicking on the red subscribe button as well as that little bell icon right next to it if you haven't already. All right, thanks for doing that. Now go to Wealthion.com/Mao, M-A-O, to see that special bonus clip from Marc. And Mike, thanks so much for joining me again this week. Whatever happens from here, I'll be tracking it with you and John on this program next week. Everybody else, thanks so much for watching. If you'd like to schedule a consultation with one of the financial advisors at New Harbor Financial, simply go to Wealthion.com. These consultations are completely free and there are no strings attached. The good folks at New Harbor will simply answer any questions you have about your investment goals or your portfolio and give you their best advice given their latest market outlook. They're willing to do this because they care about protecting people's wealth, and because Wealthion has connected them with so many thoughtful investors just like you over the past decade. We started doing this because so many people have approached us in frustration, looking for a solution because they're feeling out of alignment or downright ridiculed by the standard financial advisors who have been managing their money. You know the type. The kind that just pushes all of your money into the market, scoffs at the idea of owning gold, and when you bring up concerns about the market's sky-high valuations, they say, "Don't worry, the market will always take care of you." For many of the reasons discussed in today's video, we think this is one of the most challenging and treacherous times in history for investing. We strongly believe that today's investors are best served working in partnership with a conscientious professional financial advisor who understands the risks in play. Now, we're agnostic which professional advisor you work with, as long as they're good. If you're already working with one, that's fantastic. Stick with them. But if you don't, or are having trouble finding one you respect or trust, then consider talking to John and Mike and the team at New Harbor. Now, for those about to ask, yes, there's a business relationship between Wealthion and New Harbor, which we've put in place to make sure everything is handled according to SEC regulations. All the details on this are clearly provided on the Wealthion.com website. Also, it's important to note that New Harbor is able to work with U.S. citizens, green card holders, and those with existing assets in the USA. But for regulatory reasons, they aren't able to take on non-U.S. clients. All right, with all that said, if you'd like some insight and guidance on how to protect your wealth during this unprecedented time in the markets, go to Wealthion.com to schedule your free consultation with the good folks at New Harbor. Thanks for watching.